Welcome, ladies and gentlemen, to the second episode of the International Property Alliance podcast, the podcast where we meet up with investors from all over the world to share with us their experience and hard-earned lessons. Today, I have a really interesting guest with me that I know since a while back. His name is Sergey Kazachenko, and he will share with us his experience from his long background in property and other forms of investing as well. Sergey is a venture capitalist and investor, a business strategist, acknowledged financial analyst, international motivational and business speaker, and he's also the co-founder of Scandinavian Capital Holdings. And I will let Sergey enter the conversation and tell us about his three biggest lessons. So, welcome, Sergey.
Hello, Mark. Thank you so much. And thank you so much for taking the time and taking the effort to make sure that the knowledge and the learnings that people have experienced through investing can come out to everybody else. I think that's a very important point in the market. We're all here to help each other to grow. And, the best way to grow is to eliminate potential mistakes, and the more people can spend time to communicate to each other and distribute the knowledge, the better the investing side and the communities that the real estate is a community can be, and therefore provide value to each other, and therefore we all can grow together much faster. So thank you so much.
Absolutely. And thank you for joining. So Sergey, would you mind sharing with us one of the biggest lessons that you've learned in your many years of investing?
I mean, the core, I believe, in being research analyst, investment banks, I've been analyzing a lot of different investments, not only real estate and other alternative investments, is when equity and bonds and different type of opportunities. And what was very interesting for me to see is that people talk about real estate as it would be something different, as would be something extraordinary. And for some reason, people believe that the knowledge base needed for investment in real estate would be less than the knowledge needed to invest in equity markets or invest in corporate bonds or private companies. And from my personal experience looking at all that, I would argue the opposite. The knowledge needed to invest in real estate is important. The beauty is that it's a very available one, and you can collect it and you can expand it really quickly. And the best part of it is people in the industry are happy to share and are happy to provide any assistance possible to make other people successful and to make sure that other people grow. So my personal opinion is by far the biggest one, is to collect the know-how for doing real estate. And this is not something you can do by attending one 2-hour course. It's something you can do by experience. And everybody who's been in real estate for many years, they've seen that every single transaction give you additional information, additional value, additional small points that can improve your investments significantly. And it is just about that, small elements that can make an investment to be fantastic, or make an investment to be less appealing. So look on UK is
Understandable. So if we were to summarize the first lesson, could that be in the sense that real estate isn't that much different from other types of investment? It's a skill altogether, investing.
Exactly. It is skill, and it is a skill that you need to learn, and it's still skill that you need to practice on. If you do sports, let's say you need to practice to improve, and the real estate investment the same. You need to practice to improve. You will not run a marathon the first run you do. Right.
Exactly. Well, brilliant. I mean, I think that's a really important lesson to take away. And if we were to move on to one of the other big lessons that you've learned so far, what would that be?
The second one, which I believe was very surprising for me, that was actually the what I did not expect when I first started in real estate. My first transaction, which was 10 years back, I've done on my own, and it went well. But what the beauty of it became more and more is that real estate market is much more about partnerships, is much more about
Mm.
working together. If you look on many other investments that people do, kind of compete with each other because the profit on one might be a loss for another person. Um, uh, like for example, in equity markets, like there is always one buyer and one seller, and there's always one who benefited from that transaction, and the second one may not have benefited as much.
Mm.
But if you look on the real estate, it's not really the case. In real estate, working together creates significant value, and 2 plus 2 is not 4 anymore. 2 plus 2 might be 6, 10, or 200 if you put it together right. And my personal experience has been is by helping people, creating the teamworks, putting together the knowledge that might be very different in one power team, right? And align interests, which I believe is very important. I mean, collecting a power team and collecting good connection is important, but what I feel is the most important is to align the interest of all the parties involved, whether it's your broker who providing you financing, or your construction team, or it's person who finding you opportunities, whatever the role is. If you put the interest in the same boat, if you make sure that everybody benefits equally, the people in real estate will help a lot.
Mm.
And with that, your potential business, your potential investment becomes more profitable. It becomes more sustainable, and it becomes more long term.
Mm.
Because investing in general is about sustainability, to make sure that your results or your returns, or you perform the risk you take over a longer period of time. Everybody can make a very good investment once, but how about making sure that you invest in sustainable and profitable, not year 1 and 2, but year 10, 15, and 20 if need be.
Absolutely.
I think that's a critical point, collecting the great team and working together to make sure that our interests align to create a sustainable return.
Absolutely, Sergey. I couldn't agree more. So maybe if we brief the second lesson to be properties about people, not about actual houses. That could be one way to put it.
Yes, absolutely.
Yeah. Okay, great. But so how do you go about doing that? How do you go about creating a team where the incentive is the same? How would you say you go about to do that?
I mean, personal opinion is that for some reason, some people believe that you need to compete on a deal. The real estate, it's a very extensive, and there are a lot of assets, real estate assets in the world that you can share. And if you might lose one transaction, but working together with somebody, or you will need to give away one transaction, which is absolutely fine. The opportunities are not limited. Um, um, so aligning interest is meaning that every single person in your team benefits from what you do.
Mm.
Let's take a very good example of a construction team, right? Most people look on a construction team as simple service provider. They give you a fixed contract, and they come to the site and they build and they go away. And if they don't really perform well, there is limited downside. If they perform extensively well, there is limited upside. And that's not the way I believe it should be done.
Mm.
Work together with your construction team as a long-term partnership. Create the opportunities for them that will be long-term, so they will be coming back to work with you more and more, and make sure that there is a financial benefit to your construction team in case they perform above expectations, in case they perform the construction work earlier or faster or better, or define the discount opportunities on the market that make you save you literally save you money on your development cost.
Mm.
And if you share those parts with your team, and they feel to be a part of your transaction, not just a supply to you, they will do whatever it takes to make sure that you benefit and you profit from it as much as possible.
Absolutely. I mean, financial incentives are always the absolute best way to do so. But do you focus a lot about expanding or explaining the vision of your company as well, or do you believe financial incentives is the only and major way?
Financial incentive is important, but it's by far not the most important one.
Mm,
It's the feeling of working together on something. It's the feeling of creating something together. That's I think the difference. And you can create a financial incentive, but if a person doesn't feel that he's a part of what you do, if he doesn't feel that you share the knowledge, if he doesn't feel the benefits, right?
mm,
There is a lot of international studies saying, for example, the salary for an employer is the potential. Not if you look in leadership books and so on, the salary is not a positive contributor. It can be a negative one, but it can never be positive. The
ah,
positive one are more about creating value, is about teamwork, is about partnership, is about emotions. So you never can benefit an employer just by financials. You can make sure that they will not be negative because of it, but you can never to make a person to do anything extra because of the financial support. So you need to put soft values to it, and those soft values are different for every single person. Meaning that you need to know the people you work with.
excellent. Then you need both of these motivating factors to have a really powerful team moving forward. So
Absolutely.
brilliant. Those are the two first lessons. And then would you mind sharing the third biggest lesson that you've learned so far?
And the third one is my favorite. As some people know, I believe in numbers. I believe in doing your homework. And that means that if you look on any investment and real estate in particular, there is for some reason discussion about the real estate always go up in value. There is for some reason discussion that real estate is a safe investment, um, and I definitely agree that it is in many cases a better alternative than many others. That's why we do invest in real estate, but it's not a risk-free investment, and it's not an easy investment.
Mm,
Absolutely not an easy one.
mm,
So to create a sustainability in your returns, to create a sustainability in your business, and real estate is a business. Likewise, any other business, retail, manufacturing, anything, the real estate investment is a business,
mm,
and you need to treat it like one. In any business, you need to know numbers. You need to know your returns. You need to know your cap rates. You need to know your liquidity rates. You need to go your affordability rates. You need to know um, all those elements. And these are just couple of hundreds of elements that create your financial model and create the performance that you need to achieve to create a sustainable long-term investment.
mm.
Um, and it's not complicated. To start with, most people don't even try to go on Wikipedia and getting the first basic information. But the only way is to put your heads together, um, to get out the critical information first,
Mm,
be comfortable about it and learn it, then taking the first step, taking more advanced projects, looking on a mix of um, different numbers,
mm,
looking mix on different locations, looking on mix of different strategies, and putting all that together is in one package that will be a sustainable option for you. There are a lot of people out there on the market, talking about sending opportunities, investment opportunities. There are a lot of people out there on the market that talk about the knowledge in real estate. But when you look on the opportunities, I've seen some cases people send out investment options where you actually would lose money on the first day of your investment, and you can lose up to 20-30% of your capital on day one of your investment. And is that really an investment?
mm.
Of course not. But just being packaging nice and talking about the some basic elements, not going into details, not understanding the numbers well enough, some people do end up buying it. And of course, if you buy opportunities like that, you you may challenge long term, and you're definitely not going to achieve the sustainable returns. And
No,
that's why I believe the first and second lesson is so important. Is you create uh, your team and you create your partnerships that make sure that it's equally beneficial. You get your knowledge base right, and then you support it by knowledge base, meaning the market and so on, and you support it by numbers.
mm,
So you collect all that in one big strategy, and that strategy will be different for every single person. And that's why all three are important, because that's how you create sustainability for you, and not for somebody else who talk about it generally. I mean, my sustainability and your sustainability, Mark, is a very different type of investments.
definitely. So if the third one would be know your numbers, and I definitely agree with you here in regards to your statements. What is the most common mistake you see unexperienced investors do besides not knowing the numbers? Because obviously that is why they get into investments that ultimately will cost them money instead of make them. So what is one of the mistakes that the unexperienced investor does besides not knowing the numbers well enough?
I mean, the easy one, if you look on the people who are starting up with investments, a lot of people talk about return on investment, which is a great tool to measure the first number you need to know. But in reality, the numbers that are more important is, of course, other measurements of investments. We're talking about total returns. We're talking about return on equity. We're talking about a number of those numbers that you need to know to make your decision, because you can find an investment which has a great return on investment, but in reality have a negative return on equity or on capital employed, and that's not something you should invest in. Another thing that I believe is probably even more important is understanding your risks. Most people in real estate don't look on risks,
Mm,
and they forgo, for example, for development opportunity in the market, where in reality that opportunity is hardly sellable. And if it is hardly sellable, or it takes long time to sell, and you have investors from third-party investors who requires to get the capital back, you will end up in situation where you cannot repay your investors on time, or you cannot manage your risk right, or you cannot sell at the right price, and need to make to make a discount on your potential profit, which in that sense means you might end up losing capital. So the
mm,
only people who end up situation like that is just because not planning right, is not getting your numbers right, and not looking at the whole picture. Obviously, if you end up a situation you cannot repay the investor on time, it's mean that you probably have not looked on all the elements of the transaction and the potential risks of the transaction,
yeah.
whether that's the liquidity or the supply demand or something else. Yeah,
So that would be risk assessment is the most common mistake that unexperienced investors make.
absolutely.
And you also speak about the first biggest lesson that you had was obviously that investing is a game in general, and real estate is one part of that. So it would be really interesting to hear your thoughts on diversification between the different asset classes. What's your take on
Hmm.
that?
That's a very good question, and we need a couple of hours, or days, or
Yeah.
weeks to cover it. But in short, real estate is definitely a very good investment tool to start with. Absolutely, because it is fast learning one. It is a slow one, but it is a fast learning one,
Hmm.
because you actually have to do it yourself, and you have to be there, and you have to feel it. And my personal favorite alternative investment is generally better for the crowd, I believe, in the long run, because there are fewer people competing on it. And that's real estate is one of them. Land is another one. A lot of different renewable strategies can be the alternatives. But if you look on long term, I think a sustainable portfolio should include a little bit of everything. It
Mm,
should have physical assets like real estate. It should have liquid assets like shares and equities. It should
mm,
have long-term, stable, well, relatively stable opportunities like corporate bonds, and probably well, definitely the one that has the most risk, but at the same one, the most exciting one is investing in private companies, uh, and the most risky part of that is, of course, um, startups and venture capital type of investments.
Yeah.
But you take it one by one, is starting with this, basics, which can be real estate, adding up some more appealing long-term strategies, which can be corporate bonds, adding on equities, which is probably the most people go for, but it is the most challenging and time-consuming alternative. And trust me, I know I've been researching equities for 10 years plus. It is the most exciting one, but it obviously the most challenging one, because you have a significant competition from very experienced and knowledge investors from all over the world that you have to compete with, or on a daily basis, against on a daily basis.
Perhaps the listener should be taking away that one shouldn't be so quick to label oneself as a real estate investor or paper asset investor. One should be starting to think about the diversification. And of course, you can have your majority in a place, but perhaps not labeling oneself as one or the other.
Yeah, absolutely.
Yeah.
I mean, long term, if you look at any successful investor, they do diversify in different types of, and the diversification can be they invest in different type of companies as well. But that's the same if you play at that level already. That's the same.
Yeah, absolutely. I know we're on a property podcast, but I would like to diversify the topic a bit and ask you, in regards to your statement there on startup companies, what are the key figures and things that you look for in a new startup company to make it interesting? Because a recent study showed that the team behind the company actually make up about 55% of the decision making that a venture capitalist actually has when they make the decision. So what are the things that you look for in startup companies?
I couldn't agree more with that statement. People is the absolutely the most important element in any company, and of course for startup, but that requires a quite significant commitment. Mm-hmm. So people, for me, for me personally, that number is much higher than
50%.
Much more than 50%, because in reality, people can make a case, or people can kill a case. And with the right person, you don't necessarily need to be successful on trial number one, but you will be successful with the right person on trial number two, trial number three. The mentality is right. If they work hard enough, if they focused enough, if they're determined enough, if they passionate enough, and of course willing to learn. The biggest mistake I've seen is people to be ignorant to the knowledge they have and ignorant to the knowledge they don't have. I'm very open about things I know and things I don't know. And I'm not trying to convince people about things I don't know. I just make sure that I have people around me who knows that.
Don't know, yeah.
Exactly. Yeah. And the partnership, strong partnership with people that have knowledge that you don't, is the critical success factor. So people understanding that, they will make a case. People who don't understand that, it doesn't matter how good, how great their idea is, they will not succeed to the same extent.
And this is also why I wanted to bring you on the podcast to show the audience and the listeners that it's okay to diversify, remind everyone to know their numbers. It's all about people, and investing is a general game, and real estate is one side of that. And yes, I just again want to thank you so much for your time here, Sergey. And I'd like for you to share with the audience where people can find you and hear more from you.
Yeah, I'm very grateful for the opportunity, and I'm happy to support people who want to expand and to want to start their investment career. I think it's important for everyone. I mean, the easiest way to find me is, of course, Facebook, where I'm actively present. I'm going to be launching good personal profiles as well for people who want to know me more quite soon, and that will be obviously available. And you do find me in different events, speaking every once in a while, and I'm there to help people to expand and find the opportunities, and to make sure that their investment becomes a long-term success and not a short-term failure. Because I don't think I don't think people deserve, or I believe people deserve to succeed, and people deserve to have a realistic chance of getting their dream to come true through investments. I think that's, all of us want to be happy, and I believe investment, which is basically a starting point to get to the freedom, is one of the elements that people can become very happy for, and or be happy from. And that's why I'm all there to support everybody who wants to expand their opportunities.
And yes, so if you want to follow or find Sergey, you can search for him on Facebook. And of course, he'll also be helping out in the International Property Alliance should you have any questions following this podcast. So that's pretty much it, guys. I again want to say big thank you to Sergey, and thank you for listening in on this podcast. And make sure to tune in the next time when we meet up with the next great investor. Thank you so much, Sergey, for joining us.
Thank you so much.
Thank you. Bye-bye.